and let's rip into it. And here we are, right? 2021, and I kept thinking it was 2022, but it's not. It's 2021. I'm really sitting here wondering, holy shit, where does time go? I remember when I first started investing back in 2000, and back then I didn't know what I know today. I didn't have the knowledge, I didn't have the skill, I didn't have the experience, I didn't have the expertise. I honestly didn't have a clue. But I had a passion, and my passion was that, in 2000, I was renting a house, I was bringing up 3 kids as a single dad, and I was working full-time on building sites, and back in the day we used to do a few hours, on weekends and things like that, and I wasn't much good with my money, right? So I just sort of made a decision, you know what, I've got to go and buy a house. So I started up the savings, got myself a deposit, and bought my first property, my first actual house back in 2000, right? Now, I didn't know about property cycles, I didn't know about property markets, I didn't know about boom cycles and things like that, because the cycle that we're seeing today is really, really similar to what happened in back in 2002, 3, 4, 5-ish, around about that time, because I bought my first property. What I did, I negotiated on that deal, and I bought it well under market value. Was the first thing I did. I studied that area for 3 months. I went and met dopey real estate agents. I went to lots of agents, lots of open houses. I went to auctions. So by the time I was ready to buy, I had a really good understanding of that particular pocket of the market where I was looking to buy and purchase, right? So I knew what people were paying, and I knew what prices they were paying for certain types of properties. So when it comes to the first purchase that I ever made down there, basically, I made nearly 20% under value on that first buy. Now, fast forward to about 2003, I started to read books, I started to take an interest in property, I started to educate myself, and this is what the difference was, folks. I really went down an educational, personal development path, and that's what really changed for me in regard to what I used to do with my money. I used to gamble it a lot, I used to piss it up against the wall, putting on the horses, I used to go to card games, illegal card games, before they opened up a casino here in Victoria. And I used to do all this crazy shit, right? And my dream back then was, seriously, check this out. My dream back then was to win a fortune off the bookies in Melbourne, and then go to Vegas and take out a casino, and that's how I was going to make my fortune, right? Well, guess what? That didn't happen. And to this day, I've never met a rich punny yet. So anyway, having said that, right, the moral of the story here is back in 2003, I bought another property, and then I figured out a way to subdivide it and build one. But I didn't know, right, that market in 2003, 2004 was the exact similar market as what we're having here in Australia. It was like an Australia-wide boom, and there was massive things happening with money, finance, interest rates, all sorts of stuff, and there were a lot of dynamics that were going on, and there was a massive boom that took place. So I really took my first couple of properties, really got a really big uplift and a really big ride real early on. Now, I didn't know about taking equity out of your property and reinvesting your money in tax depreciations and all that sort of stuff. But the reason for the story is that those properties back in those days, in the early 2000s, right, have basically tripled in value, right? I mean, tripled. Now, you think about this. You go out and work and earn your money, and you might be making 80 grand a year, you might be on 110, you might be on 200 grand a year. You are never going to save that type of money. You are never going to save your way to wealth, right? So the idea of learning about property, understanding about property simply appealed to me, because back in the day, properties, for instance, in Melbourne and Victoria, they doubled every 7 to 10 years, and, they're doing similar things at the minute. So the market today is in a really strong cycle, because I predicted this back in March 2020. It was actually November 2019, when I was helping a lot of my clients buy property and helping them invest in property. And I've been doing this in this business now for over 11 years, teaching people what to do. I show them where to buy the right type of property, the right location, pay the right price. And in 2019, we found, September, October 2019, we seen a real surge in inquiry starting to come through, and I'm connected with finance brokers, financial planners, tax accountants, property marketers, property developers, and everybody started to see the same thing happen. And this really started to push into 2019 and took us right through to Christmas. And we thought, well, 2020 will be absolutely massive. We honestly thought the markets were going to go bonkers. So Here's what happened. COVID come along around February, March. Well, COVID was starting to stir up over Christmas in the news, but then by February, March, it starts to hit Australia, and all of a sudden, you know, next thing we're lobbed into a pandemic. So I believe that when we came out of it sort of, you know, late last year, and things started to ease off a bit and the market started to pick up, people realised they were still employed, still making money. There was a lot of people out there who saved a lot of cash, and therefore now we've also got the situation with super duper low interest rates. I mean, seriously, banks are nearly giving money away, right? I mean, you're absolutely bonkers and off your head. If you're in a position to afford to invest, you're absolutely friggin' bonkers on your head. If you're sitting there on the sidelines going, oh, will I, won't I, should I, shouldn't I? Because look, I've had clients talk to me, you know, 5, 6, 7, 8, 9 years ago, we're going to do something, and bought something 5 years later and go, shit, I wish I had done something. Well, don't be one of those ones caught on the sidelines, because this particular boom, it's a 24-month boom minimum, maybe even longer, right? And I'll explain why to you shortly. And at the end of it, I'm going to give you a few tips to teach you about what you can do to sort of get yourself going and get yourself into the market. So here's what's happened. For the last 14 months, right across Australia, we've had consecutive months of capital growth history, right? So, you know, last November, the numbers come out, it was around 1.9% in capital growth. Brisbane was an absolute star performer in November, right? I've been in Brisbane now for 7 or 8 years with all my clients. I've recently just bought up there in Brisbane not so long back myself. They've had a 2.9% increase, capital growth increase for the month of November. Now, that's the highest ever increase in Brisbane's property markets for around about 18 years. So think about this. 18 years ago was 2003. What did I just talk about? The boom of 2003, 2004, 2005, right? Now, people are saying to me, yeah, but it can't last, Tony. Bullshit, mate. Property's going to bust. It's got to explode. Well, listen, I've got a question for anyone out there, and stick it in the comments box beside me. Who's ever seen the market absolutely bust and drop by 10, 15, 20, 30, 40% like the stock markets? If anyone's ever seen it or experienced it, just drop a comment in, because I can tell you now, the last 3 times we had some sort of pandemic, the GFC, or big stock market crashes or world events affecting property and property markets, the most the markets dropped in any city or in any state was 5% across the board, folks. 5%. So it's pretty simple. Thanks, Andrew. I see you there, buddy. You're dead right. I've never seen it happen. So a lot of people, just a little bit of tip in here, a little bit of coaching for you. Don't get sucked into the bullshit and the hype of the media. The media are out selling a good story. If you think back to March 2020 last year, right, the media and all the so-called experts and chief economics and all the banks, this is what they were predicting. They were predicting a 30 to 40 to 50% drop in the property market. Right across the board, property markets are going to get smashed. The pandemic's here. The world's coming to an end. Well, the exact opposite happened. You know, cities and suburbs have gone up 15, 20, 25, 30, 35%. I've got properties that have increased in value by 20 to 30% in the last 18 months, folks. So you think about this. You got a $500,000 property, goes up by 20%. That's gone up $100,000. How long would it take you to save or put away $100,000? You wouldn't do it, because if you had $100,000 in the bank right now, you'd be out there plonking it into real estate if you had half a brain, right? So, folks, that's what's happening sort of from a market perspective. Now, Sydney and Melbourne have slowed a fraction, right? Last month, Sydney and Melbourne only went up around 1%, but still, 1% capital growth over a month's period of time is still a pretty good result. Again, you know, it's money that's accumulating if you understand the power of compounding interest, okay? So when a property goes up in value and it goes up by 5%, and then the next month it goes up by 3%, and the next month it goes up by 2%, and next month it goes up by 6%, that is what you call compounding capital growth. Folks, the only way to get yourself into a strong, secure financial position is to learn how to invest your way to wealth. I don't mind which way you go, whether you use property, whether you go stocks, shares, bonds, mixed fund, index funds, whatever, buy a business. There's a million different ways you can invest your money. But money in the bank right now, I'll just quickly touch on this. Money in the bank right now is friggin' useless. Your money's going backwards. Inflation's going through the roof. It's not even keeping up with CPI, so therefore you're losing money. Equity in your house, it's absolutely useless unless you pull some of it out, put it into the market and make your money work. So make your money work for you so you don't have to work for money. All right, the next thing that's happening, the cycles in Australia, again, they generally go Sydney, Melbourne, Brisbane, Perth, Adelaide. Right now, we've got every capital city in Australia going off its head. Even good old Hobart down in Tassie there's picked up 17-18% capital growth. Regional centres around Victoria, regional centres in New South Wales are going absolutely bonkers because there's a mass exodus of people who are in a good capital position and a good cash position that are just going out into country areas and buying property. So in case the lockdowns come back or the pandemic resurfaces, which it might, but who knows, that's another story. So anyway, those markets are also going through the roof. So I've got a lot of investors who I helped into some regional areas, and one of my clients just settled a property actually just last week, picked up the keys, had a tenant lined up and signed up before he actually took handover of the property. So the tenant moved in the next day. Capital growth up there where he bought easily over the last couple of years is 100 grand plus, right? I just had a phone call today from another young guy who I helped get started into a house and land package. And his first investment, he's about to settle the land probably in the next couple of days. And what we found with his property, and this is bank valuations too, by the way, this isn't retail val, this is bank vals. His property's easily gone up by 60 grand in the last 12 months. Another buyer had in the same estate, his property was valued up at $80,000 more than what it was when he originally purchased. So folks, that's the way to make money. But here's the thing, when you're talking about the cycles and where property goes, I think if you see Sydney and Melbourne starting to come off the boil a little bit, guess where people are going to head? They're going to head to Brizzy. But to get in at Brizzy right now, because the prices are moving so fast, they're predicting 15 to 20% capital growth up there in the next 8 to 12 months. It's a different bit of a dynamic than the usual cycle, because we've got cycles going on, but up in Brizzy, there's just a massive demand. There's a mass exodus of people leaving Victoria, people leaving New South Wales, going up to Brizzy. You've also got the announcement of the 2032 Olympic Games, so that's a big bonus. But I think the thing that people don't know or understand a lot about with Brisbane is that Brisbane's got about $50 billion worth of infrastructure projects firing up or in the process of starting, and very similar to Melbourne. I know there's a lot of infrastructure in Sydney as well, but right around Australia there's something like $316 billion worth of infrastructure money being spent about by the federal and state governments. So as far as infrastructure goes, jobs, employment, low interest rates, all those sorts of things, the dynamics are still telling us the same story: supply, demand, supply, demand. Down in Victoria, I can tell you about land down here. I know that land is now being sold into the first quarter and sometimes into the second quarter of 2023. So folks, that's 15 to 18 months ahead of time. The prices that I've seen going up down here, and I also can talk about similar things around the Brizzy markets. I know that around the Victorian markets, I'm now seeing blocks of land which I know we were doing for around about 130 to 140,000 bucks, and I'm talking 10 years ago. The same blocks of land today now are going anywhere from 350 to 450 grand. So they've gone from 150,000, 160 grand to around 350, 400,000, right? And that's in 10 years. I mean, we're doing stuff. One of my first ever clients that I had back in 2011, purchased a property, was down in Geelong actually, this one. And I know exactly his house and land package on a 650 metre block was 370, 380 grand, right? He paid for the house and land package. Today, you couldn't get that for under 700 grand in that same estate, right? So, folks, there is money in real estate if you know what you're doing. Going to talk about migration as well. That was another thing I wanted to touch on. Look, Morrison's already come out with the federal government and said they want to bring in 200,000 migrants into this country because, as you know, the borders have been shut for 2 years. Well, they reckon they have, but I tell you what, where I live, I've been watching aeroplanes fly into Melbourne every night of the week for the last 2 years. So I don't know where they're coming from or what they're bringing in, but I haven't seen a shortage of planes going into the airport out here. But having said that, 200,000 people moving in is a big influx. The thing that people forget too, folks, if I just want to quickly reflect back on the last 2 years, was that there was something like 400,000 expat Aussies came home to Australia. So they were cashed up. They wanted to buy property. They wanted to rent property. They wanted, they wanted to get into the property market, and that had a big impact. And that's probably something else that propelled the markets during the last 12 to 18 months as well. So when we're looking at all those sort of dynamics, there's a few things you need to understand. So if you picked the capital city and said, right, I'd like to go and invest in Brisbane, right? Is it a matter of just popping into Brisbane and go, let's just buy the first property we see? Or do you need to know a bit about the markets? Do you need to know a bit about, where are the locations? Where's the infrastructure? Where are the jobs? Where's the employment? Where's the shopping centres? Where are the big players going? Like, I like to follow the big ones like, Westfield and Lendlease and Stockland and all these guys, because they've done years and years of research before we hit that market. So obviously they're not in there spending hundreds of millions of dollars or billions of dollars in some cases. If they don't know, they only spend that money when they know the growth is coming, population are coming, people want to live here, businesses are going to want to operate here, jobs are going to be here, employment will be here, and therefore that's what makes the whole cycle thing. But the thing we've got right now is that there's a massive, massive supply and demand problem. Supply and demand. I've had two title blocks of land come my way off my direct contacts who I deal with in the property space, in the land space, and the housing space. I've had two title blocks of land in around about the last 9 months, and one of them was just a fluke that I got it. So getting land and getting supply is pretty hard. Rental demands, rent prices are going up right around Australia. There is massive rental demands now. There's shortages of investment property. So for anyone who's sort of holding property, and you might have did it a bit tough over the couple of years. I know the apartment market in Melbourne and I know in Sydney, as a matter of fact, were both heavily impacted, but personally, I don't touch any of the big high-rise multi-unit sites. We're into a fair few of the smaller boutique things, which we haven't bought into for a few years now. But having said that, some of the rentals were a little bit fractured. Some had to lower a bit of rents. Look, I dropped the rent on one of mine by about, $20 a week or $25 a week. Look, at the end of the day, I got a tenant straight back in there, and if it means, hanging fire for 12 months and letting it ride and putting it back up again, that's what I'll do. But again, once they bring the immigrants back in, once they bring all the overseas students back in, they're talking, all these overseas workers. I don't know why they want them. There's tons of people here in Australia, but whether Australian people don't want to work or not, I've got no idea. But that's sort of what we can do, folks. A general overview is this. When was the best time to plant a seed and plant a tree? It was yesterday, right? Don't sit back and wait, and don't try to predict. In any 10 to 15 year normal market, here's what happens. You'll have about 2 or 3 years of the market going like that. You'll have about 2 or 3 years like that, and you have about 2 or 3 years maybe like that, right? Your job is to build the cash flow. Your job is to earn the income that's able to supplement the thing. So I'm going to talk to you quickly about how you can get into the market and how you can invest in property, because contrary to what the media are telling you out there, people can't buy property, first homeowners are going to get smashed because you need 20% to get into a deal. Well, that's just BS. I spoke to a developer this afternoon, a builder developer of mine who's got a nice townhouse project in the southeast corridor of Melbourne. Townies are priced at about $519,000. And it's in a super growth corridor. The location, everything's fantastic. It's a really good quality builder too. It's not your cookie cutter townies. It's, you got your square edge ceilings, Tassie timber oak floors, 40 mil stone bench tops, all that sort of specced up a bit. But here's the thing. From a deposit point of view, 10% down, 90% balance on completion. Now, it's going to be, the project to be knocked over in 12 months. So that gives a first home buyer time to do one or two things. Hopefully, if they've already got a 10%, they're right to step in today. But if they don't, we can get them in on around a 5% holding deposit. They can save the other 5%. They need to commit to a plan, to a saving structure, and come out the other side. And then by the time they go, if we get some capital growth, the property's gone from 519 to 550. There's a little bit of equity in the game as well. Therefore, fund and finance the whole thing, and they might just walk out the door with a little bit of a win in their back pocket. But there are ways and means of doing deals. There are ways and means of negotiating with people and putting deals together on the table. So, folks, don't be afraid of the fact if you think, whoops, hang on a tick. Don't be afraid of stepping up and asking questions, because if you want some help to do that. So one of the ways you can do it, there's a couple of things you can do. If you've already got equity in an existing property, Go and talk to your finance broker. Don't go and talk to your bank, right? I would never, ever, ever go and get investment money from a banker, because all a bank is going to do is screw you up, tie your loans together, load you up with as much debt as they can, let you borrow up over here where you probably shouldn't, and just let you go hole for leather, because all they want to do, banks just want to keep you in debt, right? Go and use a good finance broker, and I've got Lisa that does all the work for me, and she's absolutely fantastic. But her job in this example is to go out into the market, find the right loan, find the right type of structure, because an investment loan is very, very different to your mortgage, right? So make sure that you've got someone there on your side who knows how to invest. So here's the first thing you should do. No matter what your situation is now, go and sit down with your broker and just get yourself financially assessed. Just go, hey, look, this is where I'm at. This is what I've got. What are my options, right? Another thing you can do, a lot of people have got that much junk and crap sitting around their houses that they don't even use. They say the average person could, sell between 5 to 10 grand of stuff tomorrow if they just pulled it all out and put it online on, eBay or something like that. A lot of tradies that I work with, they've got utes and motorbikes and boats and jet skis and all this sort of crap that they probably hardly even use. If you want to get ahead in the market, folks, you have to make a few sacrifices. Like your goal's got to be, how am I going to get that deposit? How am I going to, number one, get assessed, but then go, how am I going to get that money to get myself started, to get my foot in the door? So your first goal's got to be, how do I get my foot in the door? So that all comes down to finance, comes down to your income, to your earnings, to your cash flow, how good you are with money. Do you waste it? Do you blow it? I'll tell you one thing about the banks, folks. They're going to sit there and watch every transaction that you do, because they're watching. Everything's now electronic. Everyone's going with cards, bang, bang, bang. I'll tell you what I do. I pull out $300 when I go to an ATM, and I carry $300 of cash with me all the time. And I pay cash wherever I go. I don't want the bank sitting there tracking me, watching where I go. If you go into a pokey venue, but you're there to have a meal and a couple of drinks with some friends, they'll see you're in a pokey venue and they will presume, hey, this dude probably plays the pokies, right, if you're a regular there. So there's little things you have to watch out for. So, folks, I think for tonight, let me just check in. Yeah, I've covered most of what I wanted to do. Listen, if you did want to get in touch with me, the way to go is just jump on and get into yourpropertyinvesting.com.au. I'll just put a little tag into the comment section here for you. Jump on my website. You can also get hold of what I call my Financial Freedom Investor Kit. And basically, if you go to my website, and I'll click it up there for you. Whoops, I spelt that wrong. Hang on a tick, folks. I'll write it again. The old eyesight's going on me. I'm getting a bit older. Time to maybe go and get the cataracts done, if that's the case. See if I can see a little bit better. All right, let's have a hit of that one. All right, go to yourpropertyinvesting.com.au. On the home page there, if you just scroll down a little bit, you'll see, get your free Tradies Investor Starter Kit. I really designed it for tradies, but it's good for anyone out there. There's some free coaching videos on there. You're able to book a Pathway to Freedom coaching call with me. So that means I'll jump on the phone with you one-on-one. I'll get you to fill in a little questionnaire before we do it. And, oh yeah, there's the starter kit there. Beautiful. So jump on board and basically click the button and download the Investor Starter Kit. Get the free videos. There's some free coaching in there. There's a couple other little surprise goodies that I'm giving away to people. And book a Pathway to Freedom coaching call with me, and I'll jump on the phone with you and we'll have a look at your situation. I'll give you some guidance. I'll give you some help. If I can give you a few tips and pointers and put you in the right direction, I think you'll be going okay, folks. So a bit of insight out of tonight, and good luck with your property investing. Take care.